All right, so anybody who's outside, if you're not in this panel, have fun staying poor. This is where the magic happens. This is where the real alpha gets discussed. So, oh, we got another panelist? All right, come on up, man. Okay. So we got 20 minutes, because at 4:20 sharp, we got to be outside by the fire pits. That's when the party starts. All right, so yeah, I'll have folks just introduce themselves, and we'll get right into it.
Okay. Hey, my name is Josh. I lead growth at Veda, which is the DeFi engine for financial applications.
Hi, I'm Mitya. I'm not on the screen, so I'm a latest addition to the panel. I'm a co-founder of Drop Protocol. That's a liquid staking chain backed by Lido.
Hey, I'm Lee, dev and BD at Euler Finance, a modular lending protocol.
And I'm Steven. I'm a yield monkey. All I do is look for yields all day. And so I use all of these protocols, and I'm excited to talk about what you can do with them.
All right, so I'm going to open it up. I'm going to be straight up. Where are the best yields right now on February 26, 2025?
Well, go ahead.
Well, we just launched on Bob today, and I was just checking it out. We've got a couple pretty hot ones there of some Bitcoin LST loops that are available, a couple 100%, right off the bat. Sonic has been super popular as well. It's sort of growing a lot. We just launched there last week and are at somewhere in the 8-figure TVL pretty quickly, and a lot of good opportunities there for us. So that'd be my answer. But
Yeah, I'll echo Sonic. I think has been great. We are power part of the Rings protocol, so there's ETH, USD opportunities there. Pendle for Bitcoin remains strong. It's not the most decent, but I think it's pretty risk adjusted. And then if you're deploying at scale, it's a great yield source.
I second the thing about Pendle. Not the highest APY, but I just found fascinating how Pendle kind of shows you the perceived value of all these future points of the BTC LRTs. I just watched this in awe how the price discovery of the future points happens on Pendle. I think that's super cool. I'm also excited about all the different strategies that emerge around the perps markets, liquidity provider pools. I think what Gauntlet is doing around HGLP strategy is really interesting. So what they do is basically like hedge the returns from the GLP pool of Jupiter on Solana, and I think that's a really good way to convert this yield into something that is more, let's say, digestible by normies and mere mortals like myself. So yeah, I'm excited about these things.
So I have to sort of mirror what these guys have said. Pendle, obviously, anytime I get a chance, I talk about Pendle because fixed rate yields, it's insane you can get that. And why can you get that? Because of points speculation. So the hottest point speculation has definitely been Sonic. I think a lot of people were like fading Sonic for a while, and then the price went from like 40 cents to, I don't know what it's at now, it's like 75 cents this morning, so it shot up, and then we saw just a succession of all these things launch on it. So Rings with their points multiplier, we have Euler coming on there with deep liquidity so you can leverage things. Silo is somewhere in here, shout out to them, they've also provided a lot of leverage over there, and for a long time it was only people understanding that the base points. So like, I've done some math, I don't know if I'm right, but I am estimating that the average point APR for like held capital on Sonic is going to be roughly like additional 10% on your principal. So if you're leveraging that can get really exciting. Granted, only 25% of that's going to be liquid at the first airdrop, 75% is going to be as a vesting NFT. You can sell that NFT so you can kind of get the rest of it. That was kind of the first narrative. Then people found out that gems exist. Gems is an additional layer of points you're getting on top of all of this. I think someone recently priced a gem at like 22S or maybe even up to a higher number. So be aware of that as well. I think Sonic, clearly a great place for farming. I don't know if the Barachain guys are still here. That's also been exploding. It got me interested in like full range liquidity. Once again, I personally was like LPing Bara Rep Bitcoin at 140% APR with IBGT on infrared. Also check out Stride. But there's so much going on. I think leveraging LRTs, leveraging RWAs, all of these are like the biggest, hottest narratives. Open Eden was here. Reservoir was here. Resolve isn't here. They should have been here. I'm kidding. I love those guys, though. They have a junior Tron. I mean, I could nerd out forever. But the point is, there's a lot of things to do with your capital. Maybe your ETH is down bad. That's okay. Go play with RWAs. Go play with some stablecoins. Go, if you want to be risk on but risk off, go play with a junior tranche on a stablecoin. Right? You're getting a higher yield, but you still get to feel alive a little bit. So, yeah.
Yeah, I'll quickly double down on the Sonic stuff. I was just talking to them this morning about the GEMS program, and emphasizing that the nice thing about that is it's fully liquid right out of the gates. There's no vesting to that. That's going to go live sometime in the summer, straight to the protocols to distribute from there. So, yeah, much kind of easier access than the direct points program that we're excited about and people are excited about.
As soon as people figure that out, that means the IYs on like your Spectras, your Pendles are going to shoot up, which means the fixed rates for those of you guys who are yield off or like risk off can go and grab those. So, cool stuff.
And just one more thing for the maybe more conservative folks. A lot of these pre-deposit campaigns can be quite juicy. So we saw the Barachain one. Movement has recently completed that one. That was like 20% on blue chip assets. More are in the pipeline. So like that is potentially a really interesting opportunity, especially getting exposure to hype chains, not just like high APYs.
Yeah, I think there is a new one coming so Initia is supposed to launch mid-March, and they have a few interesting things going on there. So they have the so-called Enshrined Liquidity thing, similar to POC on Barachain. So you can stake your LP position, and then I think there's going to be some lending protocols launching there on day one, so you can loop the whole thing, and that's going to be interesting. They also have a bribing system between the rollups and the L1, so that they can bribe to get liquidity to the rollups. So I think that's going to be juicy as well. But that's in a couple of weeks, I think. It's going to go to the mainnet.
I have so many follow-up questions, but I guess maybe one is, we've talked about Sonic and Barachain. Who here is building on Sonic and Barachain? You guys are? Okay. Well, then maybe Mitya, how do you compete with this? And what are the yield opportunities in Cosmos?
Oh yeah, I think Initia is going to be pretty exciting. So in the let's say short term, I think that's the most exciting launch that I'm really looking forward. We're doing something funky there because we're doing an LST that represents your staked LP position. So I think I'm really looking forward to seeing how people are going to loop this thing on the lending protocols, because you're also going to leverage your voting power for this VIP bribing. So I don't know if there was a case of voting power leverage before. So I think that's going to be cool. As a builder, I'm really focused on this thing. As a user, I enjoy GLP yield for now.
You say JLP?
Jupiter.
How do you feel? I'm not the interviewer, but JLP was like my baby. I was so excited about it when it was at $4.70, and now it's at $4 because Solana has had a rough month.
Yeah, I mean, I think JLP is so we've been experimenting with our friends, and we build a directional exposure BTC strategy on top of JLP. But I mean, we say DeFi. That's, let's say, DeFi CeFi strategy because it involves some hedging on a centralized exchange. In principle, can be done fully in DeFi as well. And we got 20.
Gauntlet is building this on. Gauntlet is building this on Drift.
Oh, that's HGLP. So they hedge it, but it's still kind of directional USDC exposure. What we built is directional BTC exposure, and that was 30% APY in BTC for 2 months on average. So that's really cool, yeah. Because in principle, first of all, JLP really benefit from the liquidation fees recently. So I think maybe JLP pool itself was around 30% plus APY in the last couple of months. And converting this into BTC directional exposure is roughly maybe 4% you pay for the funding rates on a centralized exchange. So yeah, that's a pretty cool strategy. So that's what got me really excited about it.
So how do you guys think about the risk profile of these different yield opportunities? I overheard some folks earlier. I'm not a huge Barachain maxi, or I'm sort of starting to dabble in there, but people talking earlier about IBGT potentially depegging at some point, and just broadly speaking, how do you think about balancing these really juicy yield opportunities with the risk potentially that's associated to these strategies?
Yeah, I can jump in on that. I actually, listening to the panel that was just up before, I was just at the main event giving a brief talk about kind of similar topics. But I think for me personally and for us, it's about understanding that yield isn't free, and like yield comes at a cost of risk and exposure to risks and potential of things to depeg. And it's sort of just like, it doesn't even have to be the numbers of just understanding if something is at a 40% yield and you can loop it 6x and you're at 200 plus, like, which is great, but you got to know that means there might be like a 0.1% chance that this is going to go to zero and I'm going to lose everything. Which it's about kind of being on top of markets and tracking what's going on and making sure you're aware of where the depeg risks are coming from, how deep is the liquidity with how big your size is, with how big the protocol size is, how big exposure and leverage is across the market in those particular assets and pairs, and like if it goes south, how south is it going to go? Is this a 2% depeg or a 70% depeg? And just being aware of kind of the cost that you're putting up, even if it's not a direct cost, because it's coming to you as yield. So,
I think we all know risk is a spectrum, but my personal belief is that users actually view it as binary. So something is either safe or not safe, and then they go ahead and deploy their strategy. And so that's maybe not like by the book the best way to do things, but I think that's what we see. And so I think, not to go back to Sonic, but they're really thriving in that they have these high yields with this big incentive program, but there's a lot of blue chip protocols over there. That's not the case for every new chain. Some of them are more homespun protocols or forks of other things. So that's just something to keep in mind as well as you evaluate different opportunities. Like there's like the risk of the trade, but then there's also the risk of the underlying protocol.
Yeah, I think it's a very good observation that people there's only so much kind of brain power that people can dedicate to assessing risk and such. So strategies kind of fall into some broad categories. So like this is completely retarded. Okay, I'm definitely doing this. And then this is safe. Okay, that's very boring. Yeah, I don't think people in general. Just there's so many things that you can keep in mind, and you have to do your daily job and such, and then there is this kind of thing in crypto.
Oh yeah, I mean, I see the 200% risk, and I know it's stupid, but that doesn't mean I'm not going to do it. So.
We can even bring up BGT. I'm not saying it's stupid, but you talked about what if it depegs? It's not even close to peg right now, and not in a bad way. It's 20% premium, so it's trading above its actual value. So when you are farming or LPing an IBGT or an STBGT trading at a premium, the risk there is not that it goes under its value. The risk is that it goes to its underlying value. So if you're LPing full range and it's 20% premium and it goes down to, let's just say 0% premium, now you've taken roughly 10% IL. And so you have to build that into your calculation. So one of the risks we have to take in are the functional mathematical risks of impermanent loss or interest rates going up or dilution. At what TVL does the APR of this asset go below the value of this strategy? The secondary risk are the smart contracts, and typically I think that the rule of thumb is TVL. Most people look at a protocol and say, does it have sufficient TVL for me to trust it? Of course, fortune favors the bold. A lot of people who get early into a protocol do really well. This is why if you're doing all of your risk analysis things, Josh mentioned forks. If you can find a true Uni v3 fork, typically that's a trustable thing even at low TVL. If you can find a true Aave v3 or Aave v2 fork, so things are immutable, those are typically, I hate even saying trustable, but those are better. You want to have an actual fork if you're going to go with low TVL. So there are a number of ways to mitigate your risks. Typically novel contracts, low TVL with shady audits, not worth 1,000% APR. But true forks or even good audits and low TVL, there's any mixture of things that can make something attractive. And then of course, we just mentioned Oracle risks. I have been liquidated twice this cycle. Both times were because I did not check the Oracle. So it was a market rate Oracle on Gearbox, love Gearbox. Then it was a market rate Oracle on Sturdy, also love Sturdy. Both of those, of course, after I got liquidated, changed to NAV Oracles. So you could not get liquidated anymore from a DPEG. And so know your oracles, and of course, do all their other research.
How do you check the oracles?
That is a great question. Every money, Euler here too. Every money market out there should be putting Oracle information on the front end. Super easy to see because everyone wants to know: are they dealing with an NAV fundamental Oracle, or are they dealing with a market rate Oracle? Euler does a good job of this, though not everyone can read those oracles. Silo also does a good job of this. Gearbox does a job of this too. Dolomite is now, I'd say most money markets are moving in this direction, but if that could be made more clear, that'd be awesome. That's how I check. I just click around, and actually, I kind of cheat. I will ask the team now if I don't know, if I'm unsure.
Yeah, we try to put them front and center right on the vault so you can see kind of what's being used. And then we have a whole Oracle dashboard that kind of goes into every asset individually, what we're using, what the price is, what it's been, try to make it kind of as clear as we can. Because as you said, it's a super important factor in understanding what you're getting into.
So since you mentioned IL, I want to also ask about that and how you factor that into the risk associated to a strategy. How much you think about it, and sort of how should people be thinking about IL when LPing?
So this is a really fascinating question because basically you need the yields to overcome IL. So you have to have some assumptions about volatility. You can try hedging. I was speaking to someone at this event today who was saying they're running put options on their LP positions at like a single day expiry from like Deribit, and it's been like 50% effectively neutral APR on ETH, which has been incredible. You can try that. If you're going to run LPs on volatile pairs, if you're doing like stable pairs, so like wrap staked ETH or USDT, USDC, or anything highly correlated, IL is really not a big issue, right? You can go hyper tight and just farm the fees as much as you possibly can. Go to a newer ecosystem with a big fork like Kodiak. Anyone farming on Kodiak just did really, really well early on. Congratulations. Sonic, same thing. Go farm the points on like correlated pairs. You don't have to worry about IL. If you are worrying about IL, the wider the range, the less IL. So again, I go back to Barachain. Barachain's BEX is full range liquidity. So if you're farming the BGT emissions, IL is not as big of an issue, right? You're not really taking that big of a loss. You're just exposed to the two assets. If you're doing concentrated liquidity, you should find the place where you have the best ratio of fees to TVL. Fees is a function of volume and fee tier. That's kind of like esoteric. Just fees to TVL. The place with the highest fees to TVL for the pair you're looking for is where you want to be LPing if that's what you've decided to do. So recently I discovered that like an ETH USDC pair on mainnet on like Uni V3 is way less profitable at the exact same range as an ETH USDC pair on Solana. So I am farming my ETH pairs on a non-EVM because there's just a better fees to TVL ratio. So know your metrics, know what you're doing. There's so many ways you can look at IL, but really, like, just do it a bunch and you'll kind of get a feel for the numbers.
Yeah, I came from the options world before, so to me, IL is just being short gamma, it's just short option positions essentially. So my thought on all of it in general is go read Guillaume Lambert's papers from Panoptic and get deep on the math and understand really what's going on. But yeah, I mean, basically what you said, you just got to understand the trade-off of the volatility of the pairs relative to the amount of fees that accumulate, because that's really what it comes down to. So you can get as mathy as you want, but at the end of the day, you just got to earn more than you lose, I guess. So
I think IL is sort of avoidable if you like. There's other yield if you're concerned about IL. So like buy Pendle PTs or whatever. Do lending optimization. Like that's just maybe more suited for your risk profile.
All right. Well, last question here because we're going to wrap this up and go get some beers. Future of yields. So we've talked about like where people can get yields now, but I think it's always helpful to be thinking about like where I may want to allocate my capital in the future to be generating the best yields. Yeah, what are you guys hopeful and sort of excited about in the next couple months or a year?
I think what I saw just talking to people here, there are multiple teams that are building some type of tokenized hedge funds. So I think that's going to be maybe an easy way into the strategy, so that you can kind of outsource figuring out the strategy to let's say a larger variety of options. Then now it's mostly kind of on-chain vaults, and there are maybe like like limited amount of them that are really interesting. So maybe that's going to be a bit of an unlock, so that people can like choose their favorite strategies and such on-chain. Yeah, we'll see. But I think that's kind of probably the direction where it's going.
yeah, I'd agree. I think some of the tokenized kind of real world strategies and things, Athena is kind of the classic easiest one of just basically tokenized carry trades is really cool and interesting. I think anything that's bringing kind of real world yield on chain or kind of real use case yield on chain is great as we start to see more, hopefully RWA adoption and treasury yields and corporate bond yields and sort of other things move into the DeFi world. I think that'll be kind of cool to see, if and when that picks up.
Yeah, I think I'm the vault guy, so I am bullish vaults. But I think vaults are hitting their inflection point, and they will take over DeFi. So for the passive user, it's a one-click experience to some of these more sophisticated things that they may not be comfortable with or don't have the time to manage. And then what's really cool, when you deposit into a Veda vault, you get that receipt token, and that's composable within DeFi. So for that power user, the maybe more novice user is just depositing into the vault, but the power user is taking that receipt token, putting it on Aave, putting it on Pendle, putting it on some of these challenger lending protocols, borrowing against it, and then buying shitcoins or whatever they're doing, or looping that. So I think there's just a ton of room in this vault space. So that's personally what I'm bullish on.
I won't wax lyrical on vaults, but I agree. Veda has built some incredibly cool cross-chain vaults that are being used by Sonic and Rings. Definitely go check those out. Ring points are going to be a way to get leverage exposure to the Sonic airdrop. For me, what we saw here today, we heard a lot of protocols talking about fixed-term interest rates. Fixed term, fixed rate, whatever. I mean, even Liquidity V2, right? Liquidity V2 allowed you to get a fixed rate borrow cost. And if we have a fixed rate borrow cost, and we have things like Pendle with a fixed rate yield, you can combine those things for effectively what hedge funds' wet dream is, which is a fixed return investment. So if you can get a fixed return investment that's hedged in any meaningful way, that is phenomenal. You can leverage a fixed rate investment against a leveraged interest rate. That's going to be huge. I think DeFi has by far the most capacity to just be a money-making machine for those who are savvy enough to keep up with it. It runs at 1,000 miles an hour, and it is incredibly hard to track. But if you can be on the cutting edge, the bleeding edge of the yields, you will outperform the S&P 500 as long as you don't go on to pump fun, right? Just avoid that at all costs, and you'll be okay. But yeah, so I think fixed term, fixed date things are going to be really fascinating. I think that the future of leveraged real world assets. So any of these RWAs that comes on chain gets tokenized, or a hedge fund bringing their assets on. We also saw some stocks coming on chain. All of that stuff, being able to leverage, play with composability, DeFi Lego blocks, we're seeing it emerge in real time. Last cycle, everyone was saying treasury bills are never going to come on chain, too much regulation, and then it happened. And now everyone's doing T-bills, and it's amazing. So I could not be more bullish on yields.
Yeah. Thank you, guys. Bullish on yields. I'm excited. So thank you.